Welcome to Market Day Report, and welcome to May. Yep, we start trading today, and it's a new month. We did receive, just before we walked in, the weekly export sales report from USDA. We'll see how that might be affecting the trade today. Let's start with the corn market. And the old crop in the overnight action higher, up 2 3/4 cents on the front 2 months. December gained 2 1/4, 448.5, and trying to build on the gains from yesterday's session. What about soybeans? Soybeans were lower yesterday, along with soy meal and oil. The May contract lower in the overnight session, but November penny higher, 10.19 1/4. Since I mentioned meal and oil, meal lower across the board, and soy oil the same way. Wheat market. Wheat was mixed in trade yesterday. Chicago was higher and July higher overnight, 532 up 1 1/4. Kansas City was lower yesterday but higher in the overnight session, and spring wheat was higher yesterday but lower in the overnight session. Finally, over to the cotton market. Cotton had been up 6 consecutive sessions, fell yesterday, and extended those losses overnight. Let's go to Springfield, Missouri. Brian Hoops, President, Midwest Market Solutions. That weekly export sales report out. Any surprises?
Hey, good morning, Tony. The numbers were out and nothing really stood out to me as far as what the export numbers were. No private sales this morning, unfortunately. But for old crop wheat, we were at 2.7 million bushels, new crop at 8.8, and you combine those two marketing years, and it's an okay number. The corn number, again, was decent, nothing outstanding, 39.9, soybeans 15.7. So it's really uninspiring. We are seeing a seasonal slowdown, which is what you normally expect this time of year as South American supplies are harvested and being sold into the world marketplace. If there's a surprise, it's the fact that we weren't seeing big cancellations. We haven't seen a major reduction in our sales. We're still selling some product out into the world. So that's a positive sign, if anything. And I think the markets rallied after this news was released into the 745 close because they realized that these are still decent export numbers and not the dramatic slowdown that really could have happened when you're harvesting a record crop out of South America. So soybeans did make new lows overnight, but then have closed higher. The corn market made new highs or took out yesterday's highs and closed higher. Positive technical signs. Now it's the wheat market that has had kind of an anchor around the Board of Trade in the last 3-4 weeks because of all this positive beneficial rains across the plains that needs to see if we can build on yesterday's follow through from yesterday's reversal. We haven't seen any follow through yet. Hopefully we can build on something, but probably a lid's going to be kept on this wheat market because ratings on Monday should improve once again and move above last year's crop rating as far as good to excellent category goes.
Hey, Brian, when we talk about the export sales, we're talking trade, right? And we're talking about maybe there's some issues with tariffs and countries not coming in to buy. One that jumped out at me, and we don't hit this very often, the sorghum market. Their sales last week, 0. China not in the market, Mexico not in the market. Don't see that very often. Hang on, we'll come back. We'll talk livestock futures next. Market Day Report continues in a moment. All right, cash cattle south 218. And in the north, 222. Yep, cash cattle this week, 222 in the north. That's roughly $4 to $10 higher, especially when you throw in dressed at 350, and that's how we'll start trading this month. Live cattle futures. This is how we settled yesterday. And again, that April contract fell off after the close yesterday. So we'll start with June being the front month. It settled $1.80 lower yesterday at 208.40. And the feeder market yesterday, $1.45 lower on the front month, 292.57. And the hog trade was lower yesterday with June 98.27 down $1.17. Let's bring back in Brian Hoops, Midwest Market Solutions, the proteins. What catches your eye?
Okay, let's talk about the cash markets in the cattle. I thought maybe we'd have a late week standoff, and that's not the case. We saw some cash trade already, several dollars higher in the Southern Plains. We're hearing 216 early, and now it's 218 in that Southern Plains. So full $5 to $6 better than last week's trade. We're going to see a higher opening this morning, probably at least $1 better in this cattle futures. We sold off yesterday. In fact, June had an outside reversal type day as the stock market was down for a period of time on some poor economic news. But late in the day, the stock market rallied and it's higher again overnight. Shouldn't hurt the cattle market when the stock market's higher like this. It should be a benefit to the cattle futures. I think we open higher, probably at least, as I said, $1 higher off of this cash news. Cash is king. That's what's going to drive this market. The cutout values were down yesterday at noon. They were down yesterday afternoon. They may struggle in here, but the Packers, they're paying up for the cash once again this week, and they may try and cut kills even further next week. We're another 14,000 heads smaller than last week's kills. We may cut more kills next week, trying to regain some of these lost margins through cutout values.
Hey, one more before we wrap things up here. We saw crude drop to $58 a barrel, and that actually wasn't even the low in the trade overnight. Down 26 right now, 57.95. Any thoughts on crude?
Yeah, I think this market wants to continue to work its way lower. We used to trade between the $40 and $60 a barrel mark. People recently have gotten used to 60 to 80, but we're going back into that range, I think, of 40 to 60 as your top end of the range. And we're just still on that upper end of the range. And it's going to take some time to readjust. But as much supply as we're pumping out into the world, not only from the US, but OPEC increasing supply, it's a lot of product hitting the market, and that should drive down gas prices for US consumers.
Yep, Brian Hoops, Midwest Market Solutions. We'll see you back here in the morning.